So welcome back to the channel. In this video, taking a look at the Ethereum merge. Is it delayed or not? Let's dive in, see the news and updates as to why this is now circulating as a trending subject. So first and foremost here with the Ethereum chart, we can see we've dipped into around 3,000 bucks. So this is an area of previous resistances and support. There's quite a lot of confluence through this kind of region, maybe 2,800 to 3,000 bucks. And we've just come back down, retested this, and we're showing a sign here of a bounce from this region. So a bullish retest of a previous resistance flipped to support is not bad in my books. That is ETH versus USD. Over on BTC though, it is showing relative strength against Bitcoin here. So this is a long-term chart I've been tracking for a while. The first resistance was around 0.04 BTC per ETH. We smashed through that in April of 2021. The next resistance up at around 0.055 did not hold for long. As you can see, we went all the way up to 0.08, a third long-term point of resistance. And then we've come and used the 0.055 as an area of support here, coming down, testing it, and then subsequently from there, posting a load of higher lows along the way here. Generally, the trend for ETH versus Bitcoin is higher lows all the way, and we're wedging back up towards 0.08 BTC once again. So what could be the catalyst that sees us break through this hallowed resistance? I believe that will be the merge and the change of proof of work to a proof of stake consensus model. This will also change a load of different things in terms of the mindset of those who are now mining Ethereum once the merge takes place. But this has potentially been delayed. I do want to point out here some of the liquidation points currently live. So you can see here the red down the bottom is all of the shorts piling in. So the amount of people leveraging up on shorts is pretty wild right now, as of course the longs have been wiped with the dump over the last couple of days. But you can see these blue lines here are loads of 25x short positions that can be liquidated if the price moves up towards here. So around 3,100 bucks to 3,200 bucks. There's loads of shorts in this region that can be liquidated. So I would imagine that the Ethereum price finds its way up here relatively soon to get rid of those traders. Time and time again, when easy money is on the table, the market maker goes and takes that liquidity. So the Ethereum merge here is going to be a huge change, not only to the token economic structure, but also the mindset of those who are mining ETH. So currently you need hardware, you need electricity costs to take into mind, and a load of different things that put off the average person from actually mining Ethereum. But the move to proof of stake means individuals such as me and you with less than 32 ETH, that is the actual requirement to run your own node, but with lesser amounts you will still be able to with things like Rocket Pool. Essentially this means anyone can get involved, start staking Ethereum, earn a nice healthy reward for doing so, secure the network and compound those gains. Just keep reaping those rewards and try and spin up more nodes. So the merge generally, as we look at Google Trends here, is hot on people's lips. We're seeing a lot of interest in this over the last month, a huge spike in interest globally, mainly as you can see down here, funnily enough, the UAE, Canada, USA, and parts of Singapore and Europe down there as well. So a lot of people very much interested in this narrative, and it is a narrative in crypto that is driving prices. Hence, Ethereum is showing that relative strength against Bitcoin. Now, if we think about the previous model of proof of work, the individuals who are carrying out that work have mining costs, electricity, hardware, etc. So the mine and dump mindset is more prevalent in a POS system. However, that move to proof of stake means hodl more and you get more coins. So you are incentivized to hold on to your Ethereums. Hence, this is a big change in the psychology of those investing in ETH in order to mine it. So a transition from mine and dump over to the hodl mentality. So back here on Monday, just a few days ago, developers began a test for this merge upgrade, and it was going pretty well, it seems, with just some minor issues. This has been called the kind of test run for the merge. So a timeline for the actual merge date was not yet set, but Tim Baker, one of the lead developers on ETH, said that the merge will happen in July, although he said this is just a rough estimate. Now, of course, we see loads of delays in the history of Ethereum. Of course, when you have the second biggest cryptocurrency by market cap and a ton of value being locked on there, you want to ensure things are going smoothly. We're not going to take any risky decisions and put something into production that is not ready. Hence, we are doing these tests. Now, one thing to also consider with the merge is the fact that currently under proof of work, it's less environmentally friendly. Of course, a lot of processing power required, but the move to proof of stake is more ESG compliant. So from an institutional standpoint, when Ethereum goes proof of stake, I think we'll see a lot more money piling in, and hence that historic 0.08 Bitcoin to Ethereum price point could well be broken as a result of this. The article then points out that this will substantially reduce environmental impacts as we move over to the proof of stake chain called the Beacon chain. But why has this potentially been delayed? Well, this is a previous thread back from the 25th of March here. Tim Baker posted talking about the upcoming merge. Then just yesterday, 16 hours ago, someone chirped in here with some comments. Any info you can provide for ETH miners. And he says, I would strongly suggest not investing more in mining equipment at this point. A very fair point to make. And then the respondent says, are we still looking at June for the plug to be pulled here on miners? But Tim says this, it won't be June, but likely in the few months after. No firm date as yet, but we're definitely in the final chapter of proof of work on Ethereum. So this has sparked delay concerns here, as previously, and if you go onto the ethereum.org website, it says that the merge would ship in Q2 of 2022. The end of Q2, of course, being the end of June. But Tim here categorically states it will not be in June for the merge to be going live. Hence, we're looking at July here, or even August, as he says, a few months after. So with no real issues pulled out from the previous test run, it does seem that there are some delays still occurring here, and Q2 is now going to have to be chalked off and Q3 is going to have to be replaced over here on the main website. But is this bearish, or is this potentially a little bit bullish? Well, on the one hand, typically what we see in crypto is that you often get buy the rumor, sell the news. So by having the news event pushed down the line, we have more FOMO and more time to build up into the merge event. So for this reason, it could actually be bullish. As typically, like you see in crypto with games, for example, when the games are actually released, price typically goes down. People like the anticipation of things. And on the other hand, we haven't seen any categorical statements saying, look, the tests have gone really poorly. Things seem to be running smoothly and on track to a degree, but just Ethereum timescales are typically out of whack by quite a chunk. But here, Lark Davis points out this fun fact. Once the merge happens for ETH, the emissions for Ethereum will drop from the current 5.4 million a year to roughly just 500,000 per year. Hence, this is being dubbed the triple halving. So this is going to be super bullish for token economics. Currently, we have a load of ETH being burned due to EIP 1559. You can see over 2.1 million burned thus far, but there's still a load in rewards coming out. So the net issuance is a positive 1.2 million since EIP 1559 launch, but the merge potentially means we go deflationary as the issuance will drop a lot lower. And that coupled with the burning impact could mean we have deflationary periods when the gas costs start to go up. This is a Justin Drake chart, one of the ETH researchers, and he's suggesting on his best guess here that the staking APR, i.e. the issuance plus the fees accrued to stakers once a merge occurs, will be roughly ballpark 9.5% per annum. So Ethereum under proof of stake, once the merge occurs, ESG compliant, high yield here, almost 10% per annum, you're going to really see institutions flocking over this and really filling their bags. And I'm sure they're doing this already, hence the price point of ETH looks rather solid versus a load of other cryptocurrencies. So although it does seem like a delay is kind of inevitable at this point, and we're pushing this out in towards the summer, I'm by no means bearish on the ETH merge at this point. And I think as long as we do get a July or even August completion of the merge, then things are going to be looking super bullish for Ethereum. It's just if we get these huge delays, like no fixed endpoint or a major issue being brought to the forefront and publicized on social media, then we might have to start getting bearish. And generally, I think the crypto markets would react very badly on that news, as this is one of the leading narratives in the crypto space right now. But for the moment, let's not panic and let's see how things develop over the coming weeks and months. But do be aware, there's probably a load of negative headlines coming our way with all of this ETH FUD, since people like to dunk on it when things are delayed. Now, other news here, Celsius have just removed the earn function for a load of US citizens. This is due to regulatory concerns and changes over in the US. So essentially this is happening, and this applies to US customers only. Celsius will announce that crypto you deposit after the 15th of April will not earn any interest, but any crypto you've deposited prior to April 15th will continue to earn interest. So it's a change in how they're doing things, and the only way you can actually get interest on new deposits after the 15th of April is to be an accredited investor, which is a rather sore subject for a lot of people. This is just really phasing out the little man here. So TLDR on what has happened. Essentially, all coins transferred to Celsius by users in the USA prior to the 15th of April will continue to earn rewards. On the 15th of April, however, Celsius will be launching a new custody solution over in the United States. And under that, with regulatory changes, it does mean that only accredited investors can deposit here and earn yields. New transfers made by non-accredited investors in the USA will be held in their new custody accounts, will not earn rewards. And for users in the US, all coins posted as collateral against a loan that is opened prior to April 15th will be returned to their earn accounts when the loan is repaid. And those coins will actually resume earning rewards as long as they remain in the earn accounts. If you take your funds out and put them back in, no bueno. So this is not really a hate on Celsius piece. This is US regulations really not making sense. And this tweet here sums it up nicely. So you got two American citizens. One has a net worth of $5 million, makes $250K a year. The second one is in debt, makes just $40K a year. Now, when they send their Bitcoin to Celsius, only one of them will earn passive income on it. And guess which one it is? Well, as he says, we live in a regulatory clown world. Then in other news here, Terra have purchased another $100 million worth of Bitcoin, says Anthony Pompliano. And we check out the LFG wallet over here. They've now got over 42,400 Bitcoins in their custody to back the peg of UST, a total here of $1.8 billion worth. And I'm starting to see a lot of big VCs and people in the kind of know suggesting that we shouldn't be all that bearish right now. Kyle Davis of 3 Hours Capital. This could be a lot, by the way. Crypto Twitter engagement picking up again. Smart money retail about to pile into long-term strategic crypto asset allocations. Then Mike Alfred, a big Bitcoin maxi. Big announcements coming. Do they know something that we don't? Kyle then says this. Don't think I've ever seen crypto Twitter this bearish. Don't think I will see so much cope next week, though, when Bitcoin is back in the mid 40s. So maybe they know something that we don't. Maybe there is some big news announcements coming up very soon. And we've all been played by the news narrative as of late with the CPI data causing the big sell-off, and now we might get a nice recovery here. So fingers crossed for some positive events. One other chart to look at here is NIA versus Bitcoin. You want to be looking at the coins that are performing well against Bitcoin, showing that relative strength, and NIA is super, super bullish. Apparently big announcements coming around the 20th of April regarding their algorithmic stablecoin USN. And so this one is looking rather pumpy. Not financial advice, but do have a little look into the NIA ecosystem, as some of those higher beta plays could provide a nice return on investment with some short-term trades. So the ETH merge may be delayed by a short while, but I do believe this is the catalyst we require to break that hallowed land of 0.08 BTC and potentially see us move into double digits, 0.1 Bitcoin or more per Ethereum token. So a huge narrative in crypto still to be played out here over this summer. We'll be watching in anticipation. If you enjoyed this one, make sure you subscribe to the channel, and I'll see you guys in the next video.